Hi, I'm Shae Smith, Weekend Editor of Money Morning and Tech Insider. In part 1 of this 5-part series, I introduced you to technical analysis. In part 2, I'll expand on that by explaining support and resistance and trend lines. Being able to use these simple charting tools is your first step to becoming a successful trader. Now, as I've said before, technical analysis can be useful when analysing any share, index, commodity or foreign exchange. When technical analysts use the word trend, they simply mean the general direction a security or market is heading. An important thing to remember when you're looking at trends is that they each have different lengths. There are 3 trend classifications. Short term, which generally is something lasting no longer than a few weeks. Intermediate trends are something that is roughly 1 month to no more than 3 months. And a long-term trend. This is usually less than 1 year, as few traders trade a position for longer than that. Also, remember that a long-term trend can be made of short-term and intermediate trends. Say, for example, the trend is long-term, but there is a reversal and the price moves downward for a period of time. Then it switches and starts moving up again. This would mean an intermediate trend has occurred in a long-term trend. When you're looking for a trend, remember to adjust the time frame on the charts you're using. If you're analysing short or intermediate trends, a daily chart is best. For a long-term trend, daily or weekly charts will get you the best results. Now, to help you identify the trend, you can use a very useful but basic tool of technical analysis: support and resistance trend lines. The support lines are simply lines you draw on a chart that show the lower end of a stock's trading range. This is called the support line because the line supports the share price, seemingly preventing it from going any lower. To determine a support line, look for where the stock has tested the price point by just touching it and then reversing direction. When determining a support line, a general rule of thumb is that the price should test this point 3 times. A resistance line is similar, but it's a level where the stock hasn't been able to move any higher. That is, the stock has tested the resistance line, but once it reaches that level, it changes direction and heads back down. It's as though that level is providing resistance that prevents the stock going higher, hence the name. Both support and resistance lines don't just move sideways, with a stock just bouncing between 2 price points. They can move up and down. Think of it like this. When looking for support lines, look for higher lows each time a stock changes direction. It's the same for resistance lines. Each time a stock reverses from the support line, it will make higher highs. When this occurs, it's a signal that the stock is trending up. It works as well for downward trends. The resistance line will show lower highs and the support line will have lower lows. Well, that's all I have for you today. In the next video, I'll introduce different types of indicators used by technical analysis. One of them is an important number method that was first developed in the 13th century. Many traders consider this one of the most important tools when it comes to identifying share price patterns and the ability to set buy and sell levels. I'll see you next time.